This is an update to several possible bullish and bearish outcomes we have covered in recent weeks. In this video, we'll focus on several charts, including this one, with our primary focus being on this area here and important levels in this range here. We'll use this chart to look at an alternate method for drawing bull and bear demarcation lines in the same general region. And we'll close by tying the two previous charts to current Demark counts for the S&P 500. We'll examine daily, weekly, and monthly Demark charts. The traditional charts that we'll be examining today are as of the close on Thursday, June 21st, after the 30-point drop in the S&P 500. This is a daily chart, S&P 500 going back to July of 2011. The purpose of starting in this manner, trying to determine how past actions from investors could possibly help us in this region over here. If you manage your own account or manage money or follow the markets closely, I think you'll agree that early August of last year was somewhat of a demarcation line for things happening in a fairly decent manner to switching into a bearish mode. Right here, this big candlestick here is really the day where things shifted. Prior to this, things weren't too bad. After this day here, they got ugly and stayed ugly until the October intraday low in 2011. So having said that, here's your demarcation line, bull-bear demarcation line. If you come all the way over here, I think you can make an argument that the bears lost control on this day, which was roughly January 1st of 2012. Once we broke back above this area here, good things happened. So the point of this is this red box, when you're inside of this red box, things tend to be bearish. When you're inside of this green box, the upper box, things tend to be bullish. This blue line, blue dotted line, acted as resistance, 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 roughly resistance, resistance. Here's where things shifted. We broke above it, and it acted as support. So you can make an argument that your bull-bear demarcation line is anywhere in this circular region that I'm identifying right now, which would be this low here late in 2011. This is a reasonable trend line. If you draw a parallel trend line, this trend line, I think most would agree that you can make an argument that the parallel trend line acted as resistance here. Here's a bullish breakout, so that's a bullish candlestick. We came back down and tested this parallel trend line. It's parallel to this line, and we passed. Now, let's fast forward to the present day. Here's our line that acted as resistance, acted as support. Come down here, it did act as support again. We broke through it in somewhat of a head fake manner, but we're back above it. So you can make an argument that when you're above this blue line, things are good, and this tends to be bullish. When you're below this blue line, things are not so good, and they tend to be relatively bearish. How did the box come into play that we identified? Here's the green box that we identified previously. Worked like a charm. Here's the demarcation line switching from bearish to bullish, right here. Here's the demarcation line switching from bullish to bearish. If we come across, the market held in the bullish green box. So as of the close on Thursday, June 21st, again, this is a daily chart of the S&P 500, we're above this blue line. It held. That leans bullish. We're in the green box still. That also leans bullish. How does this help us now? This line here should also act as support. So if we come down again into the 1280, and this is below 1280, it's 1278. So keep 1278 in your back pocket. When we get to the Demark charts, we'll tie this area right here into the Demark charts. We also said that you can make an argument that the bull-bear demarcation line is all the way here. So anywhere roughly in this area here, even a little bit below this orange dotted line, is somewhat of your bull-bear demarcation line. All things being equal, you'd prefer to stay above this blue trend line. You could probably also draw this blue trend line here and extend it off of this low, which takes you into this region here. So let's call it 1250. Seems to make some sense. The numbers to keep in your back pocket over here are 1260, 1267, and 1275. When we get to Demark, I'll also show you that the stop loss level for Demark most likely would come down closer to, let's say, a 1250 to a 1240 level. Point of the exercise is, as long as the market stays in this general region here, we don't want to get too panicky with our long positions, and we want to be open to redeploying cash. If you break into this area here, things could get relatively ugly. We wrote an article either last week or 2 weeks ago where we said we need to be open to a buying opportunity here or a waterfall decline. And where do we get the waterfall decline here? We'll see here, once you broke above this blue trend line, we moved rapidly with almost no pullbacks all the way up to this trend line. In fact, you can make an argument that we moved rapidly all the way up to this high. Conversely, held as support, roughly held as support. If you break below this blue trend line, or an imaginary line that you can draw here that you can imagine here, just as we move quickly from this blue line to this blue line, we could move quickly from this blue line all the way down to this blue line, which would probably end up being in the 1160 to, let's say, 1140 area, since this is downward sloping and it takes some time to get out there. Markets have a tendency to give back faster than the gains. And here's an example. Here we wiped out almost 2 years of gains. You can go back 2 years on this chart and run into this level. We wiped all of that out in about 2 weeks. It took roughly 2 months, 6 weeks to do this, and let's say 1, 2, 3 months to get from here to here. It wouldn't be surprising if we broke through here to have this happen in a much more rapid manner, similar to this here. We would also look and see what the market looked like here. But when we get to the Demark counts, you'll see that if we go much below 1240 on a daily Demark chart, that's not good. And just like this red box points towards bearish outcomes, I think Demark would also align with bearish outcomes if we break 1250 or 1240. All things being equal, if you're a bull, you prefer to have 1260 and above hold. Keep that 1278 in your back pocket. Again, we're looking at a daily chart of the S&P 500 as of the close on Thursday, June 21st. A little bit different look here. Here's what we've got. This is the October low. There's a high, a high, a high, a high. If you draw a trend line attaching these highs, you can draw this pink trend line here that seems to bound prices here, roughly bounded them here, and here. You can also draw this blue trend line that works here, worked well in this general region here, and then you can see here it actually acted as support. So if you agree that this pink trend line is relatively meaningful and this blue trend line is relatively meaningful, then what you can do is draw parallel trend lines off of these highs, and then you attach them to lows, and it'll give you some idea of where support might work. So support worked here, roughly here, roughly here. This line should probably be drawn higher, so it catches this and this and this, but you get the general idea. If you take this pink trend line and move it down to this October low, when you were up here, you could make an argument that you had support down in this area, and in the future, the support gets higher and higher and higher. So once again, you got an upper trend line and a lower trend line. This is a uptrend, and here it was intact. Let's fast forward to the present day, and sure enough, the market held right at this pink trend line. It also acted as support on the blue trend line here, and once again, at the close on Thursday, these downward sloping parallel purple trend lines. So you had an intersection of the purple and the blue where we stopped yesterday. These orange lines are roughly the bull-bear demarcation levels from a horizontal perspective. On this chart, 1293 is the number you would want to keep, and 1265. There could be a battle going on in there. This purple trend line attaches this high and this high in a parallel manner. You can see it worked here as resistance, stall here, support, support, resistance, cluster, bullish breakout, support, testing that. As long as we're above this purple and blue trend line, you got to give the bulls the benefit of the doubt. Is when we held here, it told us that this uptrend off of the October low is still intact. From here, you moved from the bottom pink trend line to the upper pink trend line. Now we're again at the bottom pink trend line. You can see that if we were to move into the upper pink trend line, we'd probably get close to 1500 on the S&P 500, maybe higher. Not really sure that's a realistic scenario given the situation in Europe and given the monthly Demark charts and given the deterioration in the economic fundamentals and reports that we've seen lately. But we do have to keep an open mind for it. For now, these trend lines seem like they're still valid as long as we hold here. Much like the previous chart, if we break below this pink trend line, so the area now would be, if we plunge on Friday, it's probably right around that 1293 area. If we break 1293, that improves the bearish case, and then you can see this purple trend line acted as resistance, stalled here, acted as support here. It comes into play somewhere around 1260. If it takes us some time to get there, it would probably be closer to 1250. So keep 1260, 1250 in your back pocket, 1265. Now what we'll do is we'll move on to the Demark charts and try to tie in this area here on this chart and the previous chart. Demark charts and tools are proprietary indicators from Market Studies LLC. We're looking at a daily Demark chart for the S&P 500 during the trading session on Friday. It's roughly 10:25 Eastern Time. This is a sequential exhaustion count for the S&P 500. It's currently on a 10 count as of the close on Thursday. A 913 gives you potential exhaustion. To get to a 13 in terms of sequential, the intraday low on the 13 would have to come down and exceed this close at 1278 on the S&P 500. You've got potential propulsion support at 1285 and change here. You've got a TD line, which is basically a trend line, near 1266. The good news, if you're a bull, you can envision potentially coming down and picking off this 13 in this area and maybe even getting a close in the 1285, 1286 area to remain within this propulsion target. If you're a bear, you'd like to see 1285 taken out and you'd like to see 1266 taken out. The other bull-bear demarcation line would be if we do indeed come down here and get a 913, which again would require an intraday low below 1278, we'll get what's known as a Demark risk level. The risk level is calculated based upon the 13 bar. So the more volatile the 13 bar is, the higher the bar is, the wider the range, the further down the risk level will be. So we're guessing that if you get an intraday low and a close in this area here, that you've got to give leeway down to 1250 or 1240-ish in terms of that TD risk level. And what that risk level would tell you is it'll draw a line in the sand that will tell you how long that 9 and 13 is valid. If we get a qualified break of a risk level down here on a 9 and a 13 sometime in the next week to 10 days, then the bearish case really begins to pick up steam. Now we're looking at an aggressive combo count, and you'll see that an aggressive combo already has a 13, and the market did hold right in that area. This is the risk level that I just talked about. You don't want to get overly hung up on needing 9 and 13s. When you go back and look at declines similar to one that we have now, going back maybe 5 years, what you really want to see is that at least one of the counts, and there's 4 Demark counts, has a 13. This is the combo count. The straight combo count would require 3 successive lower moves below 1278. So to get a 13 on that, you have to go below this level for at least 3 days. From a bullish perspective, this is your Demark bull-bear demarcation line at 1324.55. As long as the market can hold above this level for propulsion, it says that this upside target all the way at 1440 on the daily chart of the S&P 500 remains possible. You'll also notice that the market came back down near this retracement level at 1329 and appears to be trying to hold near this red line and this yellow line at 1324. Again, on decline, we would look for a closing price to hopefully hold above here. If you're bullish, one good sign is that the last move in a propulsion bearish target has moved up from 1281 and change to 1285 and change. Another piece of good news is this upside propulsion target here that has been in place since June 4th is still in place all the way up at 1440. Before we move on to the weekly chart, let's tie the traditional charts that we looked at previously to this Demark chart. Here are some levels that we noted on the traditional charts. Roughly 1293 is here, 1275 and change is here, 1267 here, 1264, 65-ish here, and 1260 here. So you can see the traditional chart lines up well with the Demark chart in terms of potential support, and the fact that we could get a 9 and a 13 down in this area here. Now we're looking at a weekly Demark chart. These lines here represent the levels from the traditional chart that we just looked at. They also line up with this propulsion target here at 1275, 1274 roughly. We've got a buy setup here, and we've also got a Demark trend line coming in around 1270. Some other things we'd like to point out here. It's usually a good sign when you get a propulsion target here at 1274 and it lines up with a buy setup here, which is this 9 and this blue arrow. So you've got potential support 1274, this line here, and the 9 buy setup, which again tends to be a good sign. The other thing that's a good sign is here we got a close that was above the last 4 weeks, going back 1, 2, 3, 4 weeks. If you go back 4 weeks, this is known as a bullish price flip. We also have a TD risk level here that was a qualified bullish break. That's why this line is solid. It's at 1324.30, and you can see on Friday during the trading session we've been holding above that line. So another line that could be important is 1324.30. You've got your bull-bear demarcation line. This tends to line up with the bears right now. Again, this yellow line tells you when price is below the yellow line, these targets tend to be more meaningful. When we move above the yellow line at 1348 and change, then this upside propulsion target of 1426 becomes more meaningful. If we break this area down here, you've got another form of potentially strong Demark support that comes in at 1202 on a weekly Demark chart. We've mentioned in a previous video and possibly on short takes that we feel that any rally, even if we go all the way to 1440, now we're looking at a monthly chart, Demark chart, on Friday during the trading session. We believe that even if we move up as high as 1440, that it's probably a counter trend move within the context of a longer term downtrend. If you're bearish, this is the chart that you want to share with your buddies. This is a 9 and a 13, so you've got a 9 and a 13 and a down arrow here. And this line here is the risk level at 1402 that was never violated in terms of a qualified bullish break. So this 9 and this 13 are bearish on the monthly chart, and they remain in play. The other concern on the monthly chart is that we came up to this propulsion target at 1426, and our actual high was 1422. So this seems to be fairly meaningful. The downside targets now are all the way down at 967. The previous count we looked at was a combo count. This is the sequential count. It also aligns very well with the longer-term bearish case that says any move higher shouldn't be a situation where you're buying a dividend stock and putting it in a shoebox under your bed. If we move higher towards this level, which is 1426, it's probably more of a quote-unquote trading opportunity. But we have to keep an open mind and see what happens when we get up to this level. You've got potential resistance, Demark resistance at 1404. You've got this 1426. And in this case, your 9 and your 13 is still active at 1429.36. The other thing that's concerning about the monthly chart is there's really no form of Demark support in the picture here. There's a lot of white space, Your bull-bear demarcation line is at 1195, so roughly 1200. What that tells us is if this breaks in a qualified manner, then the odds start to shift towards a move all the way down to 967 on the S&P 500. If you're a bull, some good news is that these propulsion targets have moved higher instead of moving lower. We've got potential Demark trend line support at 1170. This is an upward sloping trend line, so it would probably come in at a higher level in here. There's another upward sloping trend line at 1105, and you've got TDST support down around 1050 on a monthly chart. The material in this video has no regard to the specific investment objectives, financial situation, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or offer to buy or sell any security or any related financial instruments, nor should any of the content be taken as investment advice. Any opinions expressed in this video are subject to change without notice, and Shavaco Capital Management, LLC, or CCM, is not under any obligation to update or keep current the information contained herein. CCM and its respective officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. CCM accepts no liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decision.